Hello, everyone, and good afternoon. As I think you all know, this is Bruce Flatt. He's the CEO of Brookfield. But Bruce, I wanted to begin by telling everybody here a little bit more about who you are and who I am. Because we're just two Canadian kids sitting here on a stage in New York City wondering what it could have been, what it is that our country could have done to provoke all of these taunts and all of these tariffs. Because Canada it's a gentle place, it's a polite place, it's a beautiful place. Okay, doesn't spend 3% of GDP on defense, but otherwise, it's a pretty inoffensive place. Our compatriots, Bruce, our friends, our families up north, are stunned that this is happening. Are you?
I have no comments. Our business is about finding great countries in the world. America's one of them. Canada's one of them. Australia's one of them. The UK is one of them. Investing, putting people on the ground and investing into the backbone of global infrastructure. So we don't trade. We actually own major backbones in every country in the world, and we sell those services and products in local places. So I guess the real point is our business is unaffected because we're a local investor. We're a $500 billion investor in the United States. We're a $100 billion investor in the UK. We're a $75 billion investor in Canada. We're a $75 billion investor in Australia. What we do is go to countries. What we really need is good rule of law, good backbone infrastructure, major amounts of capital, and we put money in the ground. And that's our business, and it has been for a long, long time, and it continues to be that.
Since 1899?
Since 1899, reformed
Several
times over, and 25 years ago, we started the asset management business here to build out with institutional clients, and that's the main asset management business we have today.
There are, however, CEOs who do find themselves in a similar boat to that you find yourself in at the moment. As you just explained, you're the CEO of a company with assets, with operations and employees here in the United States, also in Canada, also in lots of other countries, but specifically, and what I'm getting at here is a shift in trade policy and in foreign policy, but something perhaps a little more fundamental. Do you, and perhaps others as well, have to assume that we have entered, a new normal, where countries like Canada and the United States that were allies, longtime allies, may now in fact be economic adversaries? Yeah. And that new relationship has consequences that you, running a company, have to deal with?
I'd just say our business is maybe different than a lot of others. We go to countries, we invest in those countries, we sell things to their people and the products within the countries. We generally don't cross borders. As a result of that, all we need is good countries with rule of law and generally positive GDP and backbone infrastructure. Nothing has changed over the past year or 2 years, and I don't think it'll change going forward for what we do.
You do, however, make private equity investments into companies that have cross-border exposure?
Now, on balance, not really, because our private equity businesses are industrial and service businesses generally that operate in countries and sell services in those countries. So, for example, we own the largest battery company in the world. We sell 160 million batteries. We have 50 plants around the world in 35 countries. You can't ship batteries that are, those car batteries, they're pretty heavy. Even though we make the little ones. They're heavy, so they don't ship. And therefore, they're mostly consumed in country.
The local market business.
So it's local market. So our business is about backbone. And backbone means local economy, local people, local investment. So trade really doesn't matter so much to us.
A lot has been made recently, and certainly here over the past 2 days, about the amount of policy uncertainty and volatility. Those things can create opportunities too. Just yesterday, we saw BlackRock lead a $19 billion deal for control of a global ports business, and most notably, of course, that deal includes 2 facilities in Panama that the Trump administration had targeted because of their Chinese ownership. Is that going to be a trend? Forced sales, M&A driven by an urgent need, in this case, an urgent need for both the Chinese owners and the Panamanian government to get out of this administration's crosshairs?
Look, the price and value are 2 different things. The value is what you get, the price is what you pay. And volatility creates opportunity around the world for those that are strong and those that have capital to be able to take advantage of opportunities. And as long as you keep your eye on 20 years from now in the businesses that you're running, all of these things will be looked back upon as very short-term items. This will not be, what we're going through today will not be relevant 25 years from today.
It might not be relevant beyond this presidential term.
I'm just telling you, 25 years from now, we're going to look back and it won't be relevant.
You're thinking on that time horizon.
We always think on those time horizons. Everything we do.
Not everybody here can afford to think like that.
Everything we do, or why we're in private markets, is because we buy things for long periods of time. And either we're going to hold them, or it's in a fund where we may have to sell. But what we need to do is to prepare the investment for the next owner that they will accept the next 25 years. And that's really, really important to keep your eye on the long ball.
I know that you are certainly competitive in your industry, competitive as an individual. Sometimes the how of the deal-making process is important. The deal that I just mentioned, this $19 billion deal for these global ports, originated, as we understand it, with a pitch by Larry Fink, of course, who is a peer of yours, runs BlackRock, directly to the White House. And again, thinking only in terms of the next 4 years, not necessarily 25, from a competitive standpoint, is that the kind of thinking that you have to be operating with in order to be competitive, in order to win? You know, that kind of access and that kind of, I think, under the circumstances, deal-making creativity?
We're building the Intel fabrication plant for $32 billion in Arizona. We just signed a $12 billion Microsoft power contract to build renewables for them, largely in the United States. We just did a large deal in Germany with Deutsche Telekom, with their telecom towers. We just signed a AI deployment data center business in France with the French government for $20 billion. Our business is about facilitating our operating skills and amassing the large sums of money we have to take on opportunities that are significant. And increasingly, there aren't that many people that can compete with us just because of the access to capital that we have.
You're right. There aren't many people who can compete with you. There were few, however, right? Some of them started in different places. Brookfield, for many years, was known as a huge player in real estate and infrastructure, and now, of course, you're also huge in private equity and credit and renewable energy and insurance. But the others, I could name some of them, you know who they are following a similar playbook, right? Trying to give clients everything they could possibly want under one roof, concentrating more and more LP assets. It's been great for your stock price and for their stock prices. Is the future more of the same, which is to say more concentration and more convergence, the biggest firms getting not just bigger, but more alike one another? Or will there be a divergence at some point with, say, a Brookfield and perhaps another firm or two going in one direction and everybody else going in another?
I think over time, if you look at financial services, there's always opportunity for niche players, and there will be always that around the world. But there's increasingly concentration within large-scale players, which, as you note, are probably 5 or 6 today. Maybe it's 7 or 8 over time. And those large players look similar, but they're not exactly the same. And it's how they developed the access, the capital that they have available to be able to deploy their businesses. So they're similar, but then they're not exactly the same. And it's not that one is better than the other. It's just they're a little bit different for various reasons, probably that developed over 25, 30 years.
One of the big differentiators in your industry now is insurance, a huge growth engine for alternative asset managers as a group, Brookfield, of course, included. Why is that business so appealing? Why is it growing so quickly?
Look, one of the last businesses in the financial services industry that had not, it's now turned on its head. We're in the business of, in our insurance business, is finding low-risk liabilities and maximizing the asset value that we can generate on the asset side of the balance sheet. Historically, insurance companies made money from insurance and found somebody to invest their money. So the model's almost been turned like this. And our special ingredient to all of this is that we have $150 billion of capital at our parent company. We've put almost $20 billion into the equity of our insurance business, which we've just sold assets and put that money into the company. And we will continue to do that to build out the business over the next 10 years. So because we have $150 billion of tangible capital, we can grow that business very significantly. And it both helps facilitate, of course, earnings in the insurance business, but drives our whole asset management franchise as well.
So if you were to take the $20+ billion of equity that you have in that insurance business now and add 100 plus?
You know, it ultimately could be all the capital we have up top, which is $150 billion.
That would turn it into an insurance business with what in the way of assets?
It would just be turned up this way. It would be an insurance business owning our asset management and our investment operations, which is really what Berkshire Hathaway is. It's an insurance company that owns investments.
Increasingly also what Apollo has become.
Yes, they don't have an extra $150 billion of capital up top. But yes, exactly that.
So if you execute on that plan and we compare Brookfield with Apollo, because it sounds to me like it's at this point or going to be a very useful comparison, what do the two look like at the end of the day?
Look, our business has a very large asset management business, which is $1 trillion of assets under management, a large insurance company that's getting bigger, and a very significant pool of cash and assets that can be turned into cash. What we do with those assets that can be turned into cash, we'll decide over time. They may go into our insurance company if we can find opportunities, or we will redeploy them into some other financial services business, or we'll just keep buying stock back over the next 20 years. We'll have to see where it goes, and it'll all depend on opportunities.
Bruce, you recently predicted that there will be more consolidation in the alternatives industry. Will Brookfield be a buyer as well?
We are at the point where we almost have everything that we want. We have a few very simple metrics for things that could be additive to us. But if something can be additive to us, that we can bring something to a group, and that culturally we can see eye to eye and be partners, we might add in other businesses into Brookfield Asset Management. But we see no real need to pay up for anything at this point in time, just because we have a pretty broad array of products for our clients, and we continue to build those out.
I do want to take a minute and talk to you about AI, in particular because infrastructure is quite obviously to all of us becoming one of the gating factors in the growth of AI. Hundreds and hundreds of billion dollars being committed to AI infrastructure. Brookfield is a player. What's your commitment to date, and what role do you see yourselves playing over time?
So we are the largest private builder of renewable power in the world. We're among the top 3 largest builders of data centers in the world. And we're continuing to morph the model into funding compute capacity for the technology groups. The number one thing that stands between us achieving all of the models that will drive the AI revolution and productivity advances is the backbone of infrastructure around the world. It's the singular one thing. And so we continue to put enormous amounts of money behind these businesses. And it's largely because our view is that the productivity advances that are going to come out of AI models in advanced robotics and services are going to be unprecedented over the next 20 years. And what that means is we're in the midst, in the United States, but also globally, we're in the midst of this enormous investment era, but it's going into highly productive investment, which is going to lead to very significant productivity advances. We're talking 50 to 100% returns on capital, where we have seen deployment of some of these things on early test cases.
Does it matter where you are? Does it matter who you're partnered with?
Firstly, what's really important and why this is so exciting for our business is it's not if you have a model today, it's whether you have compute capacity, which requires data centers and power. And that's what's super, super important, and that's what's going to matter in the future. So we're spending, like, all of our capacity is committed for 20 years. We haven't even built some of it yet, but it's all committed for 20 years. We're entitling new sites around the world, but in particular in the US, which is going to be used for artificial intelligence models and learning, and this is very, very significant investment.
Much of this is being powered by renewable energy. Brookfield is a giant in renewables. Until recently, you had a high-profile chairman in that business named Mark Carney. He's now, of course, running for the leadership of Canada's Liberal Party, and probably, as of today, will end up being, if only for a period of time, the next prime minister, at least until the next election. What can you tell us about Mark? You've seen him run a business. Would he be good at running a country?
He will be an excellent prime minister of Canada. He's passionate about what he does. He listens to people, and he will do an excellent job. Specifically
about renewables, I know you listened to the State of the Union last night. I did as well. The president spent a fair bit of time talking about his achievements, among them, killing the federal EV mandate, bringing back drill baby drill to the oil industry. Does this, in your mind, pose a setback for renewables, to the energy transition, to transition finance, where Mark himself and Brookfield play an important role, and ultimately to decarbonizing the atmosphere?
So remember, oil is used in cars and planes. It's not used in power. We were always in favor of oil.
Gas is used in power, though.
Gas is used in power, and we were always in favor of gas because we need gas as a bridge fuel, and we're exporting it, and countries around the world need it to get rid of coal. Third, and this is really important, in the United States and in most countries of the world, solar and wind are the lowest cost power there is. When you have the lowest cost power, people buy it from you. Today, people just need power. They need any power. They need power from solar, they need power from wind, they need power from gas, they need power from nuclear, they need it from everywhere because we're going to double the electricity stack in the next 20 years, and it's impossible to get there without all of these. So I think what's being done today is smart, but it doesn't matter for renewables. It's all still getting built.
There's only one thing standing between us and lunch, and that is the last word from Bruce Flatt. Bruce, with somebody who looks at the world with a 25-year investment horizon, at a time when so many people, perhaps some of you in this room, might be uneasy, freaking out perhaps, about the state of things, what's the single most valuable piece of advice you could give them?
Stay focused on the long ball. Nothing else matters.
There you have it, folks. Bruce Flatt.